Good.
Good afternoon, everyone, and welcome to the VectorVest YouTube live stream. My name is Glenn Tompkins. Good Gordon, Jen. I'm looking at all of the people chatting in the room big time. Thank you all for showing out big time. Holy smokes, Joey. We got a lot of folks in here, don't we?
We do.
Man, say hi to Joey. Joey, this is Joey. This is everybody. Everybody sitting to my right side is Joey. He's my producer. Say hi, Joey.
Hi.
There you go. Richard from Jamaica. Now, Ricardo from Jamaica. Now, wow, the names just keep popping up. Again, thank you so much for coming out to support the YouTube live stream. What is this all about? This is Trending Thursday. My name is Glenn Tompkins. I'm a senior instructor here at VectorVest. It's always my pleasure to host these sessions here where we look at what stocks are trending in the market, and then we use the VectorVest software to give us a better gauge as to if they're good stocks, bad stocks, are there stocks to look at, to watch, or stocks to get into now. There's a lot of different things to look at, but we do use the power of the VectorVest software to analyze the stocks. If you're not a subscriber to the software, Joey's going to put a link in there for you to sign up for a trial. From the trial, you can try this out for 30 days. If you like it, you keep it. If you don't, you don't. But for all of those people who are not subscribers, we will open up the doors to give you a trial, number one. Number two, if you're new and you haven't subscribed to our channel yet, please do so. Right below the video that you're looking at right now, you're going to see a big red subscribe button. If your subscribe button is not red, don't click it. You're going to unsubscribe. So if your button below the screen is red that says subscribe, click on it, subscribe, and then you'll probably see a little bell icon. Click on it as well to be alerted to all of the upcoming videos that we're going to be doing. All right, so comment, like, but big thing, subscribe. We just recently hit the threshold of 10,000 subscribers, and man, you guys are still popping this. This is hopping and popping. We're going to keep it going. Right. So let's get right into it. We got a lot of people. Let's get right into it. The first thing that we always do when it comes down to these Trending Thursdays is we keep an eye on what's going on in the market. If you don't know, VectorVest times the market. Now, before you step up and say that, wait, you can't time the market, there's a difference between timing the market to predict where the market is going to go, which we don't do, or timing the market to stay on the right side of the trend of the market, which we do. I can't say that. Can I say that, Joey?
You can't say doo-doo.
I can't say doo-doo? All right. That's what we do. We do try and time the market by staying on the right side of the trend of the market. So, tell you what we're going to do. We're going to start off with the home page of the VectorVest software. This is what happens when you open up to the home page. This is what it looks like. And from this, you're going to be able to glean a lot of great information as to what's going on in the market. Let's start off with our traffic light, our daily traffic light into the market. Right now, the color guard is mildly bullish because we're one tick into the green. Just like a traffic light, green means go. The stronger it's in the green, the faster you can go. In this case, go means buy stocks long. The yellow means slow down. Just like when you get to a yellow light, you're supposed to slow down. I'm from Brooklyn, New York. Forget about it. We don't slow down. We speed up before it turns red. So, but in the real market scenario, when you see a lot of yellow or the market timing gauge in the yellow, slow down. And of course, when our daily traffic light into the market is in the red, that's not a good time to be buying stocks. If you look over here on our quick list, you can see what all of the major indices are doing. The Dow is nicely up today, about 1%. The NASDAQ is up about 0.8%. The S&P is up over 1%. And our VectorVest composite, for those of you who are new, the VectorVest composite is an indexed arithmetic average of all of the stocks that we track. Currently, we track 8,184 stocks. So when we say we time the market, we're timing the move of over 8,100 stocks up, whether it's going up or going down. We feel that it's a better representation of the broad market movement. Whereas you look at the Dow, tracks 30 stocks, but we use it to say that the market is up. The S&P tracks 500 or 100 stocks. We use that as a gauge to say that the market's moving up. Now, the NASDAQ, on the other hand, tracks about 4,300 stocks, but they are tech-heavy stocks, so it's very heavily weighted on the tech side. But when it's moving, we say the market is up. We feel that using the VectorVest composite gives us a better feel of the market because this indicator tracks over 8,100 stocks. Now, if we move over, we see our color guard, and our color guard looks at 3 of our market timing indicators. Price, which is that price movement of the VectorVest composite. Today it's green. Now this is a 6-day snapshot of a traffic light. This will change on a day-over-day basis, but this gives us a nice broader view of what's really going on in the market over the last 6 trading days. We track the price of that VectorVest composite on both the week-over-week and day-over-day basis. The RT looks at what we call the short-term price trend of the market. RT stands for relative timing, and this is one of our core proprietary indicators, and it's cast on a scale between 0 and 2. When RT is above the value of 1, it's favorable because the market's in an uptrend. When it's below the value of 1, as it is right now at 0.84, the market is still in a downtrend, but over the last 6 trading days, this indicator is growing in strength. We're almost to a point where we can call the market in an uptrend, but not quite yet. And the last indicator is the BSR, or buy to sell ratio. Every stock in our database gets a buy, sell, or hold recommendation every day. To get the buy to sell ratio information, which is at 0.09, we definitely have more sells in the system than buys. Because of that, the buy to sell ratio is extremely low. The market is showing a lot of signs of weakness. But as this indicator grows as well, the market will start showing more signs of strength, and everything will be right as rain, as the Oracle says in the Matrix. I'm a big Matrix fan. So if I'm looking at the color guard over the last 6 trading days, what's the main color I see? Yellow. With that, what do? We're going to be a little bit more cautious, but does this mean we can buy stocks? Yes, because we have a green light in the color guard pricing column, which means that the price of the VectorVest composite has risen on a week-over-week and day-over-day basis. There is some confirmation to the up move on a day-over-day and week-over-week basis to say that we have a green light and it's okay to start buying stocks now. Do you back the truck up? No. All right, you don't back the truck up. But this is a good time to start dipping your toe into the water. And we're going to take a look at some stocks that are possibilities to take a look at. Now, with all of that being said, what makes the market move? Well, there's 3 things that move markets globally: earnings, interest, and inflation. All right? Earnings. When earnings are up, companies are making money, they can pay their employees more, they can buy more product and things of that nature, invest in R&D. So that's the good thing. Earnings is always the good thing, but inflation and interest rates are the bad thing. In an ideal situation, in a Goldilocks good situation in the market, you want earnings to be up, interest and inflation to be down. Why? Because if interest rates are high, people have to pay back more higher money on percentage on interest when they go to borrow money. In inflation high means that things cost more money. So in an ideal situation, you want earnings to be up, interest and inflation to be down. So our first story is always center around what the Fed is doing, what's making the market what it is. Keep in mind, there is a difference between the market and the economy. Now, because of what's going on in the market and because of COVID-19, right now the market and the economy have sort of kind of melded together, which is not a normal thing, but this whole thing is full of uncertainty. Keep that in mind. So they are 2 separate entities, but because of COVID-19, the market is being affected by the economy, or the market is affecting the economy. And right now, the Fed has opened up the spigots to be able to do everything that it can to keep the economy going. So let's get into our first story.
Hey, before we do that,
oh, what am I missing?
What those 2 asterisks mean in the color guard?
Our question is, what do the 2 asterisks mean in the color guard? So not only do we have a green light that went up on both a day-over-day and week-over-week basis. From a market timing standpoint, when you put your mouse on it, this market timing call has been confirmed by a different market timing signal called the RT Kicker Combo Timing Signal. For those of you who have never used the VectorVest software, when we talk about timing the market, we have seven market timing signals to be used no matter what type of investor you are. If you are a really conservative investor, we have the confirm call. All the way to the most aggressive investor, we have the primary wave, and then we have calls in between to affect if you're a swing trader, we have the DEW, we have the green light buyer. There's a lot of different timing signals that can be used depending on how you invest in the market. But the asterisk means that it was a green light confirmed by one of our market timing signals. All right? So let's get into the first story. And again, my first stories always tend to look at what things are moving the economy. Fed minutes reveal alarm over coronavirus disruptions to economy. Officials cut interest rates at 2 unscheduled March meetings and launched open-ended bond purchases. So what's happening is they're trying to put more money into the economy by buying the bonds. All right, and that is a way of quantitative easing. It's however you want to look at it. It's a stimulus package that the Fed is utilizing. They have a lot of tools at their disposal to help to bolster the economy. And buying, open-ended bonds or just bonds in general, as they buy them, and it goes into the trough, the money trough. And actually, as long as we keep printing money, we got a trough of money, that's for sure. So, alarm over the coronavirus disruptions to the economy. What do you?
Change it to the story.
It's not changed to the story? Oh, I knew that. Thank you, Joey. Joey was telling me to change to the story. All right. So that's one story in regards to what the Fed is trying to do, but they have some concerns. Next, the next one, the Wall Street Journal survey, coronavirus to cause deep U.S. contraction, 13% unemployment. Guess what? With the numbers that came out on unemployment today, we're pretty much sitting at, 16 million people? 16 million people now unemployed. The number came out this week, I think, at 6%, 6 million new people signing up for unemployment. Folks, this is heavy stuff. There's a lot of people who are out of work, and that number could keep going up as long as we are in the social distancing mode. But keep this in mind, without me throwing any politics in here, think about it. If we didn't have the social distancing, the COVID-19 could be running rampant throughout the country. Think about that. All right, just think about that. It could be running rampant. So I know a lot of people are out of work. A lot of people are sitting at home, working from home. But I think overall, this becomes my opinion. I think what it's doing is it's helping to make sure that the hospitals are able to handle the flow of people who are coming in and out. All you guys that are in New York, please be careful. It looks like that is the epicenter of the growing amount of cases in the United States. My parents actually live in New York, but they live upstate, further upstate. They live in Peekskill, so it's not in the New York City proper area. So I'm hoping that they're okay. But all of you who live in New York, just be careful. All right, so that's talking about unemployment. And then part of the stimulus package, the $2 trillion stimulus package, was for the Small Business Association to start giving out loans to these companies that could be going out of business. Look at it this way. When this is all done and said, we're going to see a new United States. Think about that. A lot of companies will go out of business. That is an unfortunate reality of all of this. In the $2 trillion package that was put out, it's moving slow. It's, everybody who files taxes is supposed to get back $1,200 per person, $500 per kid. I don't know of anybody on my own personal circle who have received any money yet. And they keep saying it's coming, it's coming. But when people got to pay bills, when you have to go to your creditor and say, well, I'm waiting for this money, it's coming, they ain't trying to hear that. But I will step up and say that a lot of people, a lot of creditors are giving some leeway, and I think that no matter what happens in life, when bad things happen, Americans will be Americans. And we always tend to pull together when we need to. All right, so that's just a side note on my part. But the Small Business Association is under fire for failing to get aid to struggling small businesses. This is part of what the package was all about, to get those loans out to the small businesses. But if they're not getting the loans, they can't pay people. They can't pay for people's insurance, all of those things. So this story talks about the Small Business Association being under fire for not getting that stuff out. So All of these things tie into what's going into the market. So let's go look at my watch list today. I'm going to open up the software and go here. Take you good. You're there. Let's go to the Viewers tab. And I'm going to go to the watch list viewer. And every week we create a watch list of stocks that we talk about. Today is going to be 4/9/2020. All right, here's the stocks that we are going to talk about. And the two that we look at for the market are the VectorVest composite, which is our indicator that we use for timing the market. And for those of you who are not subscribers, let's look at the spiders, the S&P 500 spiders, SPY. First thing I'm going to do is I'm just going to pull up the graphs. So I have them both highlighted in my list of 14 stocks that we're going to talk about today. I'm going to right-click, view the stock graph. Here's the market. Now here's the VectorVest composite. I'm going to put this on a 3-month graph. Here's the VectorVest composite, which is looking at the movement of over 8,100 stocks. Perceived bottom right here on March 23rd of 2020. And I want to show you something from the standpoint, let's do this, from the standpoint of saying, all right, you guys didn't call out a bottom, but you know, how does VectorVest work to get me into the market at the right time? All right, and now my page will blow up real quick. How many people consider themselves to be a more aggressive traders? Type a me in the room. Tell me when they start coming in, Joey. How many of you consider yourselves to be a more aggressive trader in the market? Type a me in the room. All right? Nobody's typing me. It must be either a delay or they're not listening. There they are. So for those of you who are more aggressive traders in the market, remember I told you one of our market timing calls was for the more aggressive trader? I'm going to put that market timing call on. It is called the primary wave, which looks at the week-over-week movement of that VectorVest composite. Is the fastest signal we have. Notice that we had the bottom on March 23rd, possibly the bottom on March 23rd because the market is still now rising off of that bottom. Notice that that call issued an up call 2 days off of the bottom. Folks, I don't know who else out there has got that kind of information to get you in that fast off a market bottom. Now, if you're not that fast or that aggressive a trader, I'm going to put on just a tad bit slower indicator called the green light buyer. That looks for the green lights in that color guard pricing column like we had today. Every time you get a green light, it will issue a call. I'm going to put the green light buyer on. That issued a call the next day on March 26th. Folks, with our market timing, in case anybody tells you you can't time the market, with our market timing, we got the most aggressive people in the market 2 days, 3 days off of a perceived bottom, if that is the bottom. Now, if you're a little bit more prudent investor, I'm going to put on another call. It is called the DEW. It's our technical timing call. Let's put that on. That just issued a call a couple of days ago, which was 4-6. And is that a good call to start as the market rises? So no matter how aggressive or conservative or prudent you are, market timing does work and the market can be timed. So for any of you who are sitting out there and saying that you can't do it, I'm showing it to you right now. And right now, if you're a little bit more prudent, you got an up call. 4/6/2020. Look at that call on this graph. I have a 20-day exponential moving average, I believe. And yes, I've got a 20-day exponential moving average. That call happened just before the price, even if you don't believe in market timing. Here's the 20-day exponential moving average on the VectorVest composite. Last couple of days, it's above and still moving. So off of this bottom, if you're aggressive, we gave you 2 market timing calls. Off of this bottom, if you're more prudent, we have a market timing call. There it is in a nutshell. So for any of you who have not taken a trial of the software, this in and of itself should be a proving mechanism to tell you that we know what we're doing. We've been doing this over 30 years, all right? So that's looking at the VectorVest composite. I wanted to show you that from this perceived bottom, again, on March 23rd, when the VectorVest software started getting our subscribers back into the market, I've already done several conversations on when we got you out of the market. We got you out of the market round about the 224 time period. Look at that. That DEW call also gave a down call. So we help you both on the upside and the downside. As that down call happened, would that have been a great opportunity to get out of the market prior to all of this? For any of you who are not subscribers, this is how the software works. We will help our customers get in and out of the market at the right time. The next indicator we're going to look at is the spiders. Same kind of scenario. Remember, the spiders track 500 stocks. Our indicator, the VVC, tracks over 8,100 stocks. But look at the S&P 500 starting to move up as well. So that's where we're going to start off, looking at what's going on in the market, the indicators you can use for a market timing call to get in at the right time. And that's what it's all about. And even these calls that we gave on the VectorVest composite was earlier than anybody out there was giving you the upside or the hindsight, you call it hindsight, giving you the insight as to start to play the market. All right, that's my first story. Any questions, Joey?
Yeah, so we're going to take a couple questions, and then we're going to talk about the winner for the giveaway.
Okay, so we're going to take a couple of questions, and then we're going to talk about the winner for the giveaway. We were giving away a options jump starter course from last week, and we have a winner. It's a free course, and especially if you want to learn about options. All right, Joey, what's my first question?
Is there a way to identify stocks that are new buys, sells for the day?
The question is there a way to identify stocks that are new buys or sells for the day? And the answer to that is yes. This is a little bit off topic, but I'll take it. From here, if we have a tool called Unisearch, and in the Unisearch, we can set up any different types of parameters to find any types of stocks that we want. I'm going to go to something called Trends New Stuff. I have a search in here. Take me off the screen for a second, Joey. I have a screen in here or a search in here called New Buys. Joey's going to take me off. There we go. Right here, new buy rated stocks. And I'm going to run that as of today at 221. And here's the stocks out of 8,100 stocks. I've got to search. Here's all my stocks that are just becoming new buys today. Here's my buy, hold, sell recommendations. And yeah, as of right now, this afternoon at 222, here's the stocks. A lot of them are gold stocks. We're going to talk about that as well today. But here's the stocks, and look how much they're up today. But I can run this search at any point in time to find out what stocks are brand new buy recommendations within the software. All right, next question, Joey.
Why was price yellow yesterday when the price was up over the previous day and the 5-day?
All right, good question. Why was price yellow yesterday when the price of the composite was higher on both the week-over-week and day-over-day basis? Good question. Let me go back to the home page right here. The reason why, well, you got the full home page now. You can leave it there. Go ahead. So the reason why it was yellow yesterday, we moved down one day. Here's the price. All right, working off the prior week's price of $36.79. What's the color of that bar last week? Red. We cannot go directly in the market time or in the price column of the color guard. We cannot go directly from a red to a green on a week-over-week basis. We cannot go directly from a red to a green on a week-over-week basis. Notice the primary wave was up, which is the week-over-week movement of the VectorVest composite. So it rose on a week-over-week and day-over-day basis, but it was yellow because the prior week was red. So notice that today it's green because the price is high on a week-over-week and day-over-day basis, and we're working off of a yellow light. Come Monday, if the price is up on a week-over-week and day-over-day basis,
All right, everything looks like it's good to go. All the technology's running. If you can see me and hear me, just give me a big yes in the chat box to confirm that the technology's working. If you do have audio problems, of course, you're probably not hearing me right now, but if you encounter audio problems due to all the internet traffic we have, there is a phone-in option that you might use to get the audio portion of the presentation, or you can try logging out and logging back in. Sometimes that fixes it. So thank you, William and Michael, and is it Ty? John, Thomas, another William, and Greg. Thank you all for that confirmation. Let's get started talking about how you can be successful in just a 10-minute a day routine. So the focus of our presentation today is I'm going to show you how you can, with consistency, with just a 10-minute a day routine, outperform the broad market without a lot of muss and not a lot of fuss. All right, so if that sounds of interest to you, then you are in the right place. Let's see if I can get us to advance the screen here for the next slide. There we go. That's our deliverable for today, is I'm going to show you that 10-minute possibility. All right, particularly, I mean, we know where we are in the marketplace, right? So if you're tired of buying stocks only to see them drop right after you buy them, then I've got something here for you today, right? Or maybe you're frustrated because you had some winners and you've watched them turn around and become losers because you didn't know when to sell. Or maybe you just don't feel like you have enough time because it's the modern lifestyle, right? Nobody has time for anything. But particularly when you've been told that you have to invest hours a day if you're going to find success in the markets. Or maybe you've just made enough mistakes, had enough knocks, if you will, enough pain that you've decided that, I just don't think I can do this. Right? It might be for some other folks, but it just isn't for me. Or maybe you're just looking for a couple ideas. Well, I think I can satisfy that itch for you today too, because I will present you with some good ideas. All right. So today we're going to learn a couple key ingredients in this 10-minute program. We're going to show you how you can move from being inconsistent in your performance, if not downright consistently bad, to finding consistent gains. In that mode, right, in this section, we're going to identify the mistakes that you've probably been making, right? And beyond identifying them, so if you just stop making those mistakes, that should help you out. But then we're also going to turn the corner, and I'm going to show you proactively what you can do to develop consistent performance. All right, in the second part of the presentation, we're going to talk about finding good stocks to buy. All right, so I'm going to give you a 3-part stock buying checklist. Same checklist that I go through when I'm looking for stocks that I want to trade. In this section, I'm going to show you what to look for. I'm actually going to show you some examples, and then you and I will do it together and look for some positions you might take if the market continues to follow through in the next week because of the holidays here, some positions that you might take if there's some follow through. All right, so very practical give me for being in the presentation today. And by the way, I will share with you at the end of the session a template to help you build or develop your own trading system. The last piece of the puzzle is just to help you do that. I'm going to show you this 10-minute routine, which is what you can do. It's why the webinar is called the 10-Minute Investor. Right? It's a 10-minute routine that you do it each night. Doesn't matter when you do it. You can do it during the day. You can do it at 2 in the morning. Right? It's an intellectual process. There's no time crunch. You can do it whenever it's convenient to you, and now you can manage your portfolio and your life at the same time. Right? It's the same routine that our clients use, the same routine that I use, and it's one that we support with some coaching and coursework within the VectorVest system. All right, we're going to talk about and use as our case study the subscriber who was just totally stressed and overwhelmed during the financial collapse of 2008 and use this methodology to turn around his portfolio. All right, so he'll be our little test subject. And as I said, I'll hand out the template at the end of the presentation right through the GoToWebinar utility so you can get that PDF and start affecting your own portfolio performance. All right, so let's kind of set the table here. I'm going to ask you to do some introspection during this presentation, right? A little reflection on what your experience has been, and it's for your benefit, not mine, right? So to get us off rolling, I'd like for you to reflect for a minute and share with me, if you don't mind, in the chat box, what's been the hardest part of making money in the markets for you, right? And with some consistency, right? This thing you keep this roadblock you keep running into. Share with us and the rest of the group, if you would, where you find yourself consistently struggling. My experience of having done this while you're typing in your answers is your answers typically are going to fall into one of 3 buckets, I like to call them, 3 categories. Typically they're, I don't know when I should sell a stock, so when to sell. I don't know when I should be buying stocks. Is now a good time? And 3, I don't know what stocks I should be buying. So, When to buy, what to buy, and when to sell. Those are the three main pillars of any trading system, or the three main categories or buckets. All right. And Greg echoing some of that, proper timing, right? So when to buy, James says selling too quick due to fear of the biggest losers, right? So when to sell. Ty says how to get started in the market. Well, there's two questions in there. One is the timing question of when should I be buying, right? But if you're a new trader, right? If you're new to this discipline, there is a whole forest of possibilities out there. What I'm going to present to you today is a very rational, reasonable approach. Doesn't have you day trading, right? Doesn't have you taking on a lot of risk, right? A very prudent approach, particularly for those of you who have little or no experience. All right, so let's move on and get to the meat and potatoes here. Enough of this blah, blah, blah. So let me give you a little bit of background in this first section, because most of the folks coming to this presentation, right, are coming to the presentation because they're struggling. And a lot of folks have been struggling for years, right? So it may not surprise you to know that most investors who try to take this on for themselves, in fact, most professionals, fail if success is defined as outperforming the market, right? Here's a study that was done by the folks at Delbar, right, looking at the S&P 500's average performance versus the average fund investor's performance, right? And you see that we consistently underperform that. And that's, of course, what drove a lot of the marketplace to say, you know what, I'll just buy the ETF, do the passive investment, and just let it roll. Well, the problem with that is we just lived through it, right? We just lived through the 35% correction, and man, they're telling me I'm supposed to just hold through this. So we'll talk about that here more in a minute. But what happens, right? Particularly if you're trying to trade your portfolio and outperform the market and you're consistently underperforming, right? You start getting frustrated, right? What's it take, right? Is it that the market is just against me? The market gods are not smiling upon me? Or maybe there's some sinister thing going on that, it's being manipulated. I'm not aware of it. Or your other choice would be to say, well, okay, maybe it's not the market. Maybe it's just me, because all these other people seem to be making money. Maybe I just stink at this and I can't do it, right? So before we go down that rabbit hole, right, of negativity, what I want to do is lift the needle off the record. I know there's some people in this room who have never had a record. They were cool, all right, until they got scratchy. All right, so let's stop the negative feedback loop, and instead, if you're into performance psychology at all, it starts with painting the picture of what you want, right? So if you could do this well, if you could be effective, what would it look like? Well, the first thing is you wouldn't have stress, right? The stress and the anxiety would evaporate because you would have things under control, right? And even if trades go against you, which of course they still will, the difference is that you have now yourself and your systems under control, and that you can accommodate the bad trade, right? And once you have things under control, now you start developing confidence in both yourself and in the systems, and that you can do this. And believe me, that makes all the difference, right? If the first thing you do is start looking for how you're going to get screwed on this trade right after you buy the stock, I promise you're going to get screwed on the trade, right? It's a self-fulfilling prophecy. So let's talk about how we sabotage ourselves on a routine basis when we're trying to manage our own portfolios. Let's talk about how we're going to move from that inconsistent performance into consistent performance. So the first thing we want to do is talk about the mistakes that you're probably making. And why do I say probably making? Because VectorVest has been helping individual investors for over 30 years, and we've seen it all. Right? We're kind of like the State Farm insurance guy. We've seen it all. Right? But there are 4 big mistakes that we see clients who are coming to us consistently making over the decades. Right? So let's identify those mistakes, right? So you can stop making them, because obviously it's important, critically important, that you stop making the mistakes or you will never fix things, right? Because each of these mistakes is sabotaging your success. So, the first mistake is that we see people making or thinking of the money first, and it's not the money necessarily, because of course this is a capital game, right? We're playing with money. But the key is what that money signifies. So people come to investing with a lot of different motivations. But a lot of folks come because they have a prize in mind that they want to achieve with their investing, whether it's a secure retirement or whether it's a new boat. When you think of the prize first, right, when you're focused on the objective, you're setting yourself up for a critical error. Because when you focus on that objective and you start missing the mark, right, instead of making money, you start losing money. Even on a single trade, right? You start getting into an emotional response loop that is going to make you or help you make mistakes, right? So if you think about it, here's my example. If you think about anything you've had a success with in your past, whether it was your job or a sporting endeavor, maybe your golf swing, and you think about the things that developed or delivered your success, did you become successful because you concentrated on the goal, right, or getting the raise or whatever it was? Or did you find the success because you concentrated on doing the job well? Right? You do the job well and then you get rewarded financially for doing the job well. So in trading, right, where we're trying to go with this is let's concentrate, instead of the new shiny boat you want to buy, let's concentrate on making good trades. Once you can make good trades, the money will follow. Right? Because when you think about the prize instead, it sends you into this emotional loop. Right? You make emotional decisions, right? Particularly in periods of market volatility like we've just been through, whether it's up, down, or sideways doesn't really matter, right? There's a lot of emotional trading going on, and when you're making emotional decisions, they're typically not good decisions. At least not the same decisions that you would make had you stayed in your rational self, right? And road rage is a great example of this concept, right? If you think about your last road rage incident, right, you probably played it over in your mind 1,000 times, so you don't have any trouble remembering it. And in fact, even now, maybe your stomach is tightening up a little bit in a knot, right? Your heartbeat increases as you play it back in your mind once again. But let me ask you, right, after the dust settled, when the incident ended, were you proud of how you performed? The decisions that you made, the actions that you took? And maybe you were the victim, so not a fair question. Were you not thinking the other person had completely lost their mind? Right? So, bottom line is those decisions, when you gave yourself over to your emotional self, or the other person did, they didn't make good decisions, and they were probably different from what they would have done had they stayed rational. Right? So let's apply this to your trading. I have a little game that we call Have You Ever Said? So I'm going to present you with 5 statements. Right? And I just want you to reflect on whether or not you've made any of these statements in your trading. Okay? And if you've noticed one that you've said, let me know in the chat box the last time you said it. All right, so here's the first one. I know it's down now, but it'll come back. Right? And some of these are very prescient for the current market we're in, right? How about number 2? It's already down 20%. I might as well hold on to it now. How about number 3? I have a profit, but if I close now, it'll probably keep going up. Number 4, I know I lost more than I thought, but if I close now, it'll probably go up tomorrow or next week or after the earnings call or whatever. Name your poison, name your impetus. Number 5, the last time I sold a stock, it kept going up, so I'm not selling this one yet. So those are my top 5 have you ever saids. Well, have you ever said any of those? Well, Greg says yeah. Ty says 1, yes. 2, yes. Skating on 3 and 5, although no jury selection on number 4. Still thinking about that, I guess. William says yes. Okay, so let me plunge the knife a little deeper here. Okay, you've said maybe a couple of these. Have you ever said them more than once? right? And when's the last time you said them? Last week? Yesterday? Right? All right, so here's the payoff. What do all of these have in common? They're all emotion-based statements. So if you said any of these related to a trade, you've been making emotional decisions in your trading. And what did we just say about emotional decisions? They're typically not good decisions, and they're typically not the same decisions you would have made had you stayed in your rational self. And so they're likely leading you to poor results, and they're sabotaging your success, right? Because you're responding to greed and fear and frustration, desperation, right? So if you're thinking any of these things before, during, or after your trades, I got news. You're not going to be successful. So how do you avoid that? Well, you keep this an intellectual process. So what you need is you need to build in a system, right, which eliminates the emotional decisions. All right, so we'll talk more about that, but this is only the first mistake, right? Now, admittedly, this is the trading psychology piece. The others are much more mechanical, but let's take them in turn. Our second biggest mistake is that people buy stocks that are going down. And unfortunately, this is something that the industry teaches us from the jump, right? That buying a stock that's going down is a good idea, right? Well, before we explore that statement, right? Think about this. Where did you pick up that idea? Right? All of us, when we take on a new endeavor, right? Whether it's riding a bike or investing, right? You look to somebody who's done it before successfully because you don't know much about it at all and you'd like to avoid the pain, right? And learn from somebody else who's doing it successfully. So in the finance industry, that used to mean when I started that you went to the library and got the big fat books because they were all the best. Now you turn on TV and YouTube and get tips from the pros, right? Although I will say we're a little bit more democratized now with the electronic media. But still, who is writing the fat books? Who's talking to you on television? Well, those are the industry pros. We call them the industry gurus, right? The people who hold the industry wisdom, right? And those gurus are telling us that, yes, you should buy stocks that are downtrends because they're getting cheaper. And in fact, you can buy for the same dollar outlay, you can buy more shares. And in fact, if the stock is falling, if you continue to buy more and more shares, you're actually lowering your average cost. All of those are good things. And all of those are true. But there's a problem. And it's shown on this chart. And I'm sure in this current price correction, you have your own examples in your mind. But we're going to look at this chart as an example, and it's of Windstream, but I'm not worried about the company. Just look at the chart itself, because it serves as a good example of what the industry gurus would tell us is a good stock to buy, right? And this actually comes to us as a real-life example from one of our coaching sessions, where one of our clients who is just new to the program brought this as an example of a stock that he bought. Well, why did he buy it? Well, this is a one-year chart, right? Daily candlesticks. So the stock is just coming off of its 52-week low, right? And the idea here is, okay, we're on the retracement now. Great entry, getting in at a low price, and we're just going to ride this puppy all the way back up the page to its former glory, right? That same thinking tells you that this was a good time to buy, and 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 all they were was the next leg up before the next leg down, right? It's a classic example of how the gurus would tell you to buy stocks that are moving down, right? So the guy who brought this to us was Steve, and he's in a webinar just like this one, and he chatted in just like you've been doing. What do you think about when I bought it 2 days ago? So this is the day of the webinar. This is the day that he bought it, the last green candle, right? You ever bought the last green candle? Yeah, me too, right? And I'm not here to tell you you will never buy it. You're going to do it again. The difference moving forward, though, is that you're going to have a plan before you even buy the stock of what's going to happen to you if it was the last green candle, All right. So we talked to Steve in the coaching session about this particular trade, right? And he responded, okay, well, I'm selling it now. So we'll talk about the specifics of what we covered in that conversation. But the key here is at this point is the industry is telling us that this is a good opportunity to buy the stock at a better price. The problem with that is that's only true as if the stock rebounds, because this one, as like so many, didn't, right? When you buy a stock that's in a downtrend like this, they typically continue to fall. Windstream in this case fell another 10% in the next 2 weeks. Oh, right? And oh, by the way, another 60% in the next few months. And in fact, how low is low? Well, how about penny stock oblivion, right? It's trading at under 20 cents at the time of this slide as a pink sheet, right? So imagine if Steve hadn't sold over here, right? And I know some of you have lived this dream, right? Maybe didn't get down to penny stock status, but you've lived the dream. Some of you are holding those stocks right now, right? So what happens to you? Well, now we start getting into the wish, hope, and prayer mode, right? And each bounce in the stock, you think, okay, this is it. I finally found the bottom. We're recovering. And over here, you're just ecstatic, right? Because over the past 3 months, the stock's actually been rising in price. Still well off your cost basis, but at least it's uptrend. Oh, not so much, right? So what we're trying to get at this point, what I'm trying to get across to you is that when you buy stocks that are doing this, they tend to continue to do it, right? And when you have the right buying criteria, all of this can be avoided, right? So what you see in the past is most likely what you're going to get in the future, and being taught to buy stocks like this sets you up to make the third mistake. You just hold on to that losing position too long, waiting for the bounce, waiting for the recovery, right? Because all stocks eventually go higher. Well, no, they don't, right? So you end up holding on to that losing stock position, right? Way too long. You might have been in the same shoes as Steve, right? You buy the stock right after you buy it, it starts to drop. You're thinking, praying, hoping that it'll come back, or I couldn't have been wrong again, right? Or worst plan, maybe I should buy more, lower my cost basis, right? Probably the worst solution to the problem, right? The real problem is that you bought the stock without an exit plan. It's like jumping out of a plane without a parachute, right? There's nothing worse you can do because you've assumed unlimited risk in that trade, right? If you look back at this Windstream trade, a lot of us would have just sat on it, hoping and praying for it to come back. You find out you're still holding it months, sometimes years later. Well, there's a couple negative things going on here, right? Beyond just the loss in the value of the position, right? First of all, we tell ourselves, well, it's not a loss because I haven't sold it. It's not a loss till I actualize it. Kind of the Buffett, I didn't lose anything in 2008 because I didn't sell, right? As if it's coming back anytime soon. And by the way, if you come under financial duress and need to raise cash, which may be the case with some of the folks in the room today, you're taking the loss. So best way to avoid the situation is to not get in it, right? Now, there's two other things, though, that are just as insidious as the loss. One is that every time you open up your brokerage account, where do your eyes go first? Is this double-digit red loser that reminds you that you stink. What's that doing for your trading psychology? Go get him, Tiger, right? I'm sure the next one will be better, right? The other point is you have money tied up in this trade, right? Money that you can't redeploy in a stock that's actually doing what you want it to do, right? So even if this thing does recover and it recovers over the next 5 years, right? There are other stocks that, first of all, have been going up in this time frame and are continuing to go up. And that's a much better place to have your assets. All right. Finally, our fourth mistake is that folks ignore market direction. Right? And this one is huge, and I think probably the biggest dollar and cents mistake that folks make, because the gurus are teaching us that buy and hold is the only way to go because you can't time the market. Right? You've heard the phrase. And unfortunately, buying and holding sets you up for this roller coaster ride in your portfolio. And by the way, you just took the big dip. Right? That first big hill, you just took it. How's that feel? Right? Just like the roller coaster, the way up is slow. It takes you 10 years to build up the gains, and it took us, in this case, a couple months to give them back. Right? So the way up is slow, and the way down is unfortunately, unsettlingly fast. Now, I need to update this slide once we figure out whether or not we really have a bottom, right? But I'm guessing there are people in the room who lived through the dot-com bubble burst, right, back in 2000. If not that, then the housing bubble burst and the ensuing global financial crisis in 2008 and 9, right? But I happen to live through the dot-com bubble burst, right? And so we bottom in 2003. We build up over the next 4 or 5 years, right? The way up is slow. And then what happens? It takes you about a year to give it all back, right? If you focus just on the financial collapse, right? The market pulls back 40%. The S&P 500, 38. Close enough, right? When you lose 40%, recognize that you need to gain 66%.
Take some advanced course. That's all under the preserve header there. So you can scroll through the summary here. It will give you exactly what we do in each portfolio, how to build and manage your capital appreciation, the importance of that steady income through dividend growth payers, the importance of dividend safety, earnings growth rate when it comes to those. A lot of questions come up about dividend stocks now because of what's going on. Our company's going to be able to continue to pay and grow their dividend. Well, in the live session on Friday, I'll have a couple of alternatives to talk to you about that have come up based on what's going on now.
Man, Jim, somebody's streaming over you. Todd's streaming. Todd just started a stream.
Right. Okay, so what happens?
He's got to stop? No.
The beauty of live entertainment. We're being.
Yeah, nobody's watching you. We're all watching Todd's presentation. Open the door. Is that him?
So no one can see me right now? I was on a roll.
I don't know what we do now.
What's he doing? A successful investor? Is that just a sales?
That's the bad thing about streaming on YouTube.
Ask him to stop streaming.
Stop streaming YouTube?
Yes.
Put this.
You're right. No. I apologize. You need to stop streaming YouTube. You just took out money. Can you stop? I know.
I have no idea. I don't know.
Yes.
10-minute investor, yes. Did he stop it?
He's gonna try to. He's gonna get ready to try to stop it.
Then you can turn it back on when we're done, right?
Yeah, when he's done, but folks don't your shit up and makes us look dumb.
Tell me when I'm back on, Joe.
Sorry, Jim.
Oh, no, it's fine. Hey, listen.
You're back.
All right. We are back. The beauty of live entertainment. All right, folks, we're back. I'm. You know what I'm not sure of, though, is where we left off. Joe, is it?
You were talking about
Can maybe somebody could type in and...
You were at preserve.
But is that when I got cut off?
Yes.
All right. All right, great. All right, so I talked about our live stream, which is next Friday, April 17th, 9 a.m. Eastern Time. We talked about building the capital appreciation portfolio. We will walk step by step exactly how to use the VectorVest program to find the right stocks at the right time, and more importantly, place the proper risk management techniques. We'll do the same for the dividend portfolio. And I mentioned, I'll repeat just in case somebody got cut off, yes, it is a time where folks are worried about their dividend stocks and their dividend payouts. The strongest companies will continue to pay and grow their dividends, I believe. But we'll talk about some alternatives in the Friday session that I've been working on since this crisis began, and we can talk about it live. It's the beauty of having a live session. And then finally, create your income stream and the strategic defense system that you'll see in the summary here. I was starting to say that when it comes to protecting your portfolio, just think of a put option as an insurance policy, right? There are two very basic, very popular option trades that if you're managing your retirement nest egg, it's my opinion that it is essential that you understand the covered call and the protective put. And I was saying earlier, you don't need some advanced options course to do it. You don't need to go out and read 15 different books to be able to do it. Sessions 4 and 5 on the live stream, I'm going to walk you through the anatomy of a covered call and exactly how, when, and why to place a protective put for insurance. So it's really what sets apart a lot of what we do when it comes to portfolio management here at VectorVest. So I look forward to walking through all that. And then finally, we'll walk through implementing the entire plan. And we'll even throw in a bonus session at the end. We'll talk about trading spreads for monthly income. We'll introduce you to that. And it is all about, we'll call it part 3 of the income portion of the 3 core strategies, because selling covered calls or selling credit spreads are fantastic ways to pad your bank account to continue to get that steady flow into your portfolio. And so, again, thank you, Joey. Thank you, Glenn. If there's any questions, Joey, I'll take 2 seconds and answer if there's any questions on it. But if you go to the VectorVest.com/events page and choose the Ultimate Retirement Solution one-day live stream, you'll see the summary here. You can click on register, and you'll know that it's $4.95 is the early bird. You can have that price up until April the 15th, I believe. And just if you're an elite subscriber, if you happen to be an elite subscriber watching, just know $4.95 is actually $2.50 better than your elite pricing. So you don't have to call in or anything. You can go ahead and sign up. You will have access to the entire one-day live stream for 1 year after. You'll get a workbook, you get all the slides that we use, and we'll have a moderator. We'll be able to interact live throughout the day. Okay, so Glenn, thanks again. Joey, thank you. And if there's any questions, these guys will help you out, or you can give a call.
All right, thank you.
Me when I'm back. All right. Thank you for sticking around for that. Jim Penna actually is actually our manager of retirement. And for many of you who are not subscribers, we don't always just talk about trades and learning to protect your portfolio. Your long-term nest egg is what Jim is all about. So thank you for doing that, Jim. I had one other story, but you know what we're going to do? I think that what we're going to do is we're going to go right into looking at your stocks. With what Jim did, I think we're good with the stories. My last one was going to be on coronavirus. I'm going to hold off on that until next week. All right, so I think we covered a lot of good stuff today. If you can, stop. The prize winner, Tony, did she come? Did she?
Yes, I got her.
Oh, we got her. We got Camellia Kwok. We got her. So, Tony, yes. It was claimed, my friend. And maybe next week we'll do, all you can hear is Jerry D singing. That wasn't Jerry D, Jake. That was Todd.
He's trolling me.
Oh, is he really?
Yeah.
Okay. All right. So with all of that being said, let's start looking at some of the stocks that you want to take a look at. I won't be able to get them all, but I'm going to work on as many as I can. CNC, NVAX, comma, wow, nobody's typing in stocks. If that's the only 2, I'm going to leave them alone. AMIT, comma, that's a good trade right there, Roger. I made a lot of money on that. IMPUY Platinum earlier this year. I made a lot of money on that. JP Morgan, all right. Silver is another good play. Ford, I like Ford because they are making ventilators right now. So I do like it from that perspective, but Ford overall is not that good a company overall. We already looked at gold, Charles. MYL, comma, Shopify, comma, Pins. What is that, Pinterest? Yep. Comma, Ego, that's another gold stock. Comma, is that INSG, Inseego? I don't know much about them. APA, comma, Amazon, comma, Air Canada. I don't think I'm going to be able to pull that up in here. I'll look at FANG. I'll look at Love, which is Southwest Airlines. Oh, FANG, comma, oh crap. FANG, comma, LUV, comma, Lyft. I'm only going to take a couple of more. Ford is already in there. Square, comma, INTC. One more. I'm looking for a new person. Amit, PVAC. All right. Joey, do me a favor. For anyone whose stock I missed, for any stock that I missed, and I'm going to put one in there, James. Somebody I do know, PBR. I'm going to put PBR up there. All right. For any stocks that I missed, Joey put a link in there for you to be able to analyze any stock from VectorVest for free. All right, any stock from VectorVest for free. Tanya, watch MITT. They are going through some kind of litigation. Be careful with that. I see the stock is moving up, Tanya. Be careful with that. In our Jockey Club, we've been looking at it. I would say be very careful with that MITT trade. All right, there is some news behind it on some litigation, so just be careful with that, all right? And there is the link for the free stock analysis report. All right, so anybody who's still putting in stocks, again, I've only taken the ones that I can do and finish up for the day. Joey's got a link in there for you to click on where you can analyze any of your stocks from VectorVest for free. APA, Apache, petroleum stock. Petroleum is starting to move again. Not ready, especially not APA yet. I like that it formed the base. I like that it formed the base. It tried to get above the 20-day, but look at that. That 20-day serving as a good level of getting in or getting out. Right now, it's closing below. Be careful with that. I'm not ready to touch it yet. Not ready to touch it yet. Let's go to the next stock, Ford. Again, with the advent of them making ventilators, they started moving up. I do have higher lows. Even though it pulled back, I do have higher lows. Today is a down day. It's up because it gapped up, but the price pulled up from its open price today. Be careful with that. If you're in it, though, it is still above the 20-day exponential moving average, and leave it be. All right? Next stock. Wow, Amazon. Everybody's ordering a lot of stuff off of Amazon, right? Stock coming off a low, moving higher. Look at that, higher lows, was in a channel, broke out of the channel. I like the break out of the channel, which happened on 4-6, followed through the next day. Today is a down day. That's fine. The stock is above the 20-day exponential moving average. It has broken above the level of resistance. Leave it alone right now if you're in it. If you're not in it, I wouldn't be buying it today. It's a down day. I'd put my order in 12 cents higher than the high. All right? Let's go to the next stock. Kareem, double top on which top? On which stock? You talking about on Amazon? Or what's the other one? Nope, it's got to be on Amazon. I don't know if I call that a double top. It pulled back down. Right now, I do like that Amazon broke out and just leave it there the way it is. All right. If you keep adding in new stocks, I cannot add them in today. All right. Just keeping that in mind. That's why the link is there for you guys to jump on board with. All right. Southwest, double bottom. Then I got a double bottom there. And on Ford, was it a double? Now, Ford was just going down until the advent of the ventilators. They started moving up. Overall, the fundamentals on Ford are not there. The fundamentals on Ford is just not there at this time. All right. Southwest, the air industry, the travel industry has been affected adversely. They're definitely in a downtrend since the COVID virus. They're trying to make a run, not ready to pull them up just quite yet. Not just quite yet. All right, Intel, nicely above its 20-day exponential moving average. A little pullback right now, but still trading above the 20-day. And if I drew connecting the lows, I'm still hitting higher lows. The stock is overall from this low in an uptrend, just pulling back right now. Not a time to panic. You do have a level of support sitting at about 55.38. Let's see if that level of support will hold, if it'll bounce and keep moving up. But if you're in it, leave it alone. I wouldn't have been getting in it today because the stock's price is going down. Always make sure before you pull the trigger on the stock price, make sure it's going up. All right. Mylan Labs, another drug company, a lot of sideways move on it. Look at that, a lot of sideways move. I've got a level of resistance currently sitting at 1693. Let it get above that level. I like that it's above the 20-day exponential moving average. Let it get above that level of resistance. Once that happens, it's got clear sailing up to 2311. You got a good opportunity once it breaks through that level of 1693. I'll let it run as long as it stays above the 20-day exponential moving average. You guys still keep putting stocks in. I'm not going to be able to look at them. All right, next stock. JP Morgan, also coming off a level of a low. Notice that a lot of stocks are exhibiting the same characteristics right now, where they're all hitting higher lows, coming off of a level of a low, moving higher. I'd like to see it get out of its own way as well. Nice up day today, but a big wick at the top, a little bit selling pressure. A little bit of selling pressure right here. So that's where that stands. Be careful. It is above the 20-day exponential moving average, but I have some selling pressure. All right, let's go to the next stock. Wow, NVAX, another drug biomedical. This happens to be in my coronavirus watch list, rocking and rolling nicely above the 20-day exponential moving average. Right now, I'm showing a little bit of a down day. If I'm in the stock, leave it alone. That 20-day exponential moving average is going to serve as a good opportunity to manage the trade. Love the upward move on that stock. Let's go to the next stock. Same thing with INSG. Telecom Cellular. Went above the 20-day, broke through a level of resistance right here. Look at that run. Nice open candle. Stock recently become a buy. If I'm not in it now, let's wait till it breaks above this level of resistance, sitting at a price of $9.70. I'm only 40 cents away. Let it break above that, showing that upward move. If you're already in it, leave it alone. You're happy. And if you're already in the stock, you're already happy, let it be. If you're not in it yet, I would say wait until it breaks above that level of 970. Put in an order about 975 to make sure you're buying into a stock that's still steadily rising. But love that above the 20-day exponential moving average. CNC, same kind of scenario. Look at the move above the 20. Broke through one level of resistance, two levels of resistance, and still moving higher. Look at the lows, higher lows, stocks in an uptrend coming off of the low. Love it. Now, see that wick right there? The wick stopped right at that level of the 3-month high, which was sitting at 68.64. That wick stopped right at that resistance level. That is the reason why I like to wait for a stock to go above the level of resistance before you go and buy it. All right. EGO Gold stock, same kind of scenario, higher lows, broke above that level of the 20-day exponential moving average, but what's it doing overall? Watch it. It's moving a tad bit sideways. Let it get above this level of resistance sitting at 832. That's a little bit room to go. If you get into it now, use that level of 832 as a price target. But if you want to give it more room, wait until it breaks above that. You got good upside to the level of 1129. Excuse me. All right, let's go to the next stock. Silver, right along with gold, starting to move. Recently jumped above the 20-day exponential moving average. I would go about 5 cents higher than the high. Big wick on it as well. Look at that wick. Big wick on the stock today. Closed green candle as well. A little bit of a bearish, bullish day, a bullish, bearish day on it. Be careful. I would like to see more confirmation of upward move if I'm not already in it. If I got in it because it's above the 20-day exponential moving average, I'm fine. Leave it alone. Next one, EFC. Man, look at that. Nice level of support sitting at $3.59. Bounce above that level of 20-day, 2 solid days. This stock has got good clear sailing up to the 3-month high of 1912. If I'm not in it yet, though, I would rate to buy it. The high price is $11.83. I'd put in an order 5 cents higher than $11.83. I like that. And once that happens, you've got good clear sailing up to that level of the high. That's your level of where you would think about getting rid of it or taking some off the table. I like that big time. But love the 20-day exponential moving average, nicely moving higher. Make sure you're buying into the stock as it's rising. IMPUI, I made money way back here, way before the coronavirus hit. Somewhere up in here, I made a lot of money on this trade. Then coronavirus comes, then the stock pulls back a little bit, breaks below that level of support. What's it doing now? It's getting ready. It's getting ready. And watch the wick today. I got a lot more selling pressure on the stock than I had yesterday. So just be careful. I like the movement above, but I want some more confirmation before I pull the trigger. All right, I want a little bit more confirmation before I pull the trigger. Let's go to the next one. FANG, what was the last stock before this? Before IMPY, EFC. EFC. All right, EFC. Let's go to the next stock. IMPUI. It won't load FANG. Don't know why. Let's go to ABBV. Love the move coming off the low. Nicely above the 20-day. Broke above a level of resistance. Moving up. I like it. Now, I do have a level of resistance sitting at 85.82. If I'm in the stock, why not use that as a profit target? And once I get there, maybe I take the trade off or I take half of it off because if it breaks through, I got another level of resistance sitting at 91.93. All right, 91.93. But I love the move. I like that. Make sure you buy 12 cents higher than the high. Now, you'll notice sometimes I say 5 cents higher than the high. Sometimes I say 12 cents higher than the high. If the stock is less than $20, 5 cents higher than the high. Higher than $20, 12 cents higher than the high. But I love the move moving higher, and I love that it's above the 20-day and broke through a level of resistance. All right, let's go to the next one, Shopify. Man, Shopify looks like it should be rocking and rolling, but it's just not. It can't get enough traction to just go. All right, nice update yesterday, a little bit of a pullback day today, but it is clearly above the 20-day. You'll notice I love using that 20-day for the purposes of swing trading. For those stocks to get me in and out at the right time. If I'm more of a trader, I like using a 3 and an 8 exponential moving average. Let's go to the next one, AMIT, another stock coming off of a low, moving higher, just broke through the 20-day exponential moving average yesterday. What's the FA on SHOP? What do you mean FA? Tell me what you mean by FA. It broke above yesterday, followed through, not really today on a down day. I want to make sure, remember, breakthrough, I want to buy on an up day. I want to buy on an up day. AIMT is not showing me an up day today. All right, so let's go to the next stock, Square. Boop, boop, boop. Fundamental analysis. So what's the fundamental analysis on Shopify? Let me go real quick. Shopify, let's go look at RV. RV, below 1. So the upside potential is not there, but Shopify has got some safety. So half of it, this is more of what you would call a conservative stock that's just getting beaten up right now. Put this on a 1-year graph. Shopify over the last year was moving up nicely prior to COVID. But this is more of a longer-term stock, just not the right time to be in it. Not the right time to be in it. And DM for profit, that's a good thing. You can always pull up stock analysis report to get your fundamental analysis. How do you put moving averages on your graphs? Go to the price box. If you go to the price box and right-click on it, you see here where you can add a moving average. That's how you add moving averages to your graph. All right, after Shopify, what do we have? My voice is slowly but surely going. Had a busy last couple of days, so I apologize for that. Square did not want to come up. You're welcome, Red Eagle. Square doesn't want to come up. All right, that's fine. PVAC. Hello, Chewy. PVAC. I'm not feeling it just quite yet. Another petroleum stock where I'm not feeling it yet. Let the stock break above that level of the 20-day exponential moving average. The stock had been getting killed, trying to make a rebound, but can't get above that 20-day exponential moving average. Let that happen first. Why are you not using the 3 and the 8 today? Roger, because from the standpoint of the news that I'm trying to do on Trending Thursday, I'm looking at these stocks more from a swing trade rather than a trade. And for the Jockey Club, I love using the 3 and the 8, but I'm switching gears here when we look at the news on these stocks, whether they're good, bad, or indifferent, I like to look at it. I'm going to start looking at them more from a swing trade perspective. Does that make sense, Roger? Because not every person in here is a subscriber to the software. All right, so maybe some people will walk away with a good sense of, hey, VectorVest found me a good trade. I'd rather do it on a swing trade perspective rather than on a trade perspective. Does that make sense, Roger? That's why. All right, and last couple of stocks. Lyft. I like, again, look at the low, look at the trend line connecting higher lows above the 20-day exponential moving average. A little selling pressure today, big wick at the top. A little selling pressure today. Be careful with that. I'd rather buy on a candle that's nice and open, not on a candle that's showing me some give back. All right, next stock, Pinterest. Higher lows. Again, a lot of these stocks are exhibiting the same characteristics as the market is moving. Keep in mind that the market's direction affects 80% of the stocks in the market. A lot of the stocks that are in the market are exhibiting the same characteristics that the market's move is doing. So the stock is above the 20-day, a little bit of a spinning top candle today. I don't know if I would have bought it today, but go put your order in 5 cents higher than the high. Make sure you're buying into the stock as it's rising. Last stock, PBR. Wait a minute, ain't that a beer?
And the professional bull riding.
And the professional bull riding, but it's a petroleum stock. It's a petroleum, Pabst Blue Ribbon and the professional bull riders and Petro Brazil. It's got all of those things. What does swing trade mean? Swing trade means that you're holding stocks, trying to hold stocks for a couple of days to a couple of weeks. In the Jockey Club, we specifically try to trade some stocks. But as a swing trade, I'm trying to hold stocks for a couple of days to a couple of weeks. Using that 20-day exponential moving average gives me a little bit more confirmation of a longer term hold. All right, Lynn, does that make sense? That's why I'm using the 20-day. I like that you guys realize that I did move from the 3 and the 8 to the 20, and now hopefully you understand why. All right?
They're paying attention.
Who's paying attention? They're paying attention. I agree. Joey is saying you guys are paying attention. Market seems to be fizzling down. Is that giving a hint for Monday, Glenn? You know, I'm done looking at the stocks. Let's do this real quick. I'm going to pull up one more graph. Let's go look at the VVC before we close out today. Let's see what the market is doing on an intraday basis. It's going to go from end of day to intraday, 5-minute bars, current day. Market is, now when you say the market is fizzling, is it really? It's still higher. This is the open. It's still higher than the open. I'm not going to call that fizzling. Here's the open price. We never faded the gap from this morning. This is just insight going into the close of business today, folks. All right. So for all of you who are here, this is just some added stuff. I know I'm over, but this is just some added stuff. All right. Here's the open of the day. We never got close to fading the gap of the open today. The DTI kissed and now separating. Let me see. I can put the MTI on here. I didn't put the MTI on here. Dag nabbit. That's all right. I'm not going to put the MTI on right now, Kirby. This is just some insight. So, you know something, even with the uncertainty in the market, how comfortable you want to be holding stocks overnight. Now, let me go take off the 20 period. Now I'm going to throw on the 3 and the 8 for the purposes of from a trading day today. The 3 and the 8 are about to cross coming into the close of business today. We only got about 45 minutes left. So I'm not going to call it fizzling. It fizzled. Found the floor, the 3 and the 8 about to cross. Anybody who's new to the 3 and the 8, I won't explain it right now. This is just added bonus footage. That's all that this is. This is added bonus footage, and I'm going to add, where's it at? Add a parameter, capital appreciation. I'm on the VVC, not the market timing graph, a little different. Stock, market timing, intraday, 5-minute bar, current day. Now I'm going to add another indicator that you'll only find here called the DTI. This is our day trading signal. Yeah, we're not above our value of 1.2, or are we? So, folks, if you're new to the software, we got some stuff for you. All right, we are above our trigger point of 1.20. The market still is in an uptrend. This is for the people who are subscribers, who have real time. For those of you who are not, guess what? I've got a day trading timing signal. A day trading timing signal for timing the market. How is the market timing different from the market climate? The market climate looks at the things like earnings, interest, and inflation that move markets globally. The market timing looks at the move of over 8,100 stocks, two different things. All right. Should I learn to short in this bear? George, if you don't know anything about shorting, I tell you no. And right now, I think we are too much bouncing off of a possible level of support or a level of a low to start thinking about shorting. I wouldn't touch it yet. I think it's a little bit too late to short right now. All right, can you place a trailing stop on a typical graph? No. No, I can't put a trailing stop on a typical graph, but I can put it into a portfolio. All right, you guys asked a lot of good questions. That's the reason why I wanted to give you some insight as to what the market is looking like before we close. Could you explain how to add an EMA? I showed it today. Right-click on the price box to the right. Right-click on it. Go to add moving average. You can put either a simple exponential or weighted moving average. That's how you add a moving average to the graph. With that, folks, thank you for being here. Sorry about the mix-up today with the stream, but you know something, the majority of you still stayed. All right, Demetrius, go click on the link for the stock analysis report. That way you can get all of the analysis you want on Chewy. All right, with that, Joey, can you type it in just one more time for me?
The what?
He's looking for stock analysis report.
Yes.
Joey's going to click that in for you, Demetrius. Click on that link, type in Chewy, and you will see that. All right, with that, folks, thank you all for being here. I'm glad I'm getting an extra day off because this week was a lot of webcasting, a lot of talking. My voice is feeling it. It is feeling it. But thank you all for being here. You know, I'm a Christian, so I'm going to tell you, I'll put it out there. Happy Easter. Happy Easter to all of you. And know the reason for the season. That's all I'm going to say about that. Thank you for being here. My pleasure. And I will see you next week. And with all of that, I got to go. Adios, arrivederci, ciao. Peace.